Welcome to Momentum Mondays. Today is April 28th.
No, it isn't.
Oh,
It's
yeah,
already April 28th.
yes, almost May.
It's almost summer. It's already in the 90s here. This
Wow, it's beautiful.
beautiful but hot.
Are you growing any avocado there or any seeds?
I don't think anything grows here. So Momentum Monday. What about cannabis? Yeah, all right, big shot. Let's get right to the action.
All right, let me share my screen. And this is
Not much. It was it's another great week.
Another strong week, and the S&P 500 and the Russell 2000, not Russell 2000, Nasdaq 100 are back at new all-time highs. The small caps are kind of lagging, but potentially setting up for a breakout. 160 is an important level.
Mm-hmm.
And I think a lot will depend on financials, on energy stocks, and on healthcare, because so many of them are in the Russell 2000.
Oh, well, let's fish where the fish are. I mean, it seemed to me last week like it was all enterprise, so a bunch more breakouts, the same names that we've been talking about for 2 years just took the leadership again.
Every week we see a different sector rotation. 2 weeks ago.
But I mean, enterprise softwares have been leading for like 2 years. They've taken a little.
Exactly. So after a brief break, last week they woke up again, and probably it has something to do with Microsoft gapping up again on earnings and reaching an almost $1 trillion of market cap. Many of the breakouts in enterprise software stocks that didn't work for most of April and March, they all of a sudden are working again. As you can see, this is the IGV, which is one of the ETFs that tracks the performance of software stocks.
Yeah, all-time highs. Okay.
So it's definitely leading the market. I mean, relative strength of 89. So, and that's an ETF. So for an ETF to have such a high relative strength score, that's pretty impressive.
Mm-hmm.
And if you type all the other software ETFs, they're similar. Like they're at all-time highs. Like we have XSW as well. All of them, and that's why we're seeing so many breakouts in those enterprise software names. And by the way, many of them still need to report earnings. So keep in mind that many of them are up substantially in the past quarter. So that means that expectations are very high going into those earnings reports. So even if they exceed substantially the expectations, we might see a muted market reaction just because so much has been already baked in.
Yeah, it was interesting. Amazon was quiet all day, then closed really strong after their earnings.
Yeah,
big volume. It's just, since March, it's just drifted higher. And Friday's close was interesting. Salesforce, where are they at? So it's kind of Workday, Microsoft, back at all-time highs. So it's the same, they took a breather for a little while, but now they're, you're right. It's probably related, to Microsoft. This is a big week because Google is reporting, and the stock pretty much closed at all-time highs. No, I can see 1291 back in. Is that accounting for dividends? Is Market Smith's stuff accounting for dividends?
I don't think so.
Basically, it's a closing weekly all-time high. It's kind of
Google doesn't pay dividends, I think, as far as I know. Yeah, that's what it is. Apple does.
Earnings. So I think this week is we could have a silly good week. if Google gaps. Apple also reports, it's run back here above 200, and boy, I mean, I'm excited to see what happens. I don't think they can surprise. I don't know what they have in their repertoire. Whereas Google has so many levers to pull. Apple, I don't think much has changed in the last quarter. No new products to speak of. So it's just going to be more services chatter, and then Spotify, who's it started out the week with a really negative Barron's article, just picking it on margin. You can see it's just kind of been a dead company, and it'll be interesting to see them report in an era, with all their acquisitions going on in podcasting. It'll be interesting to see them report. What stood out? Anything standing out? New ideas standing out to you, Ivan?
I mean, there's so many breakouts in software stocks right now, and as I said, many of those companies are scheduled to report in the next 2-3 weeks. So I think you need to be nimble if you're in those stocks, because I mean they can easily gap down 10%, even if they report decent earnings. Of course, in a giddy market, or as we are currently, maybe the negative, any pullback will be bought. But don't forget that bull markets are markets of stocks, so they're low correlations market, and that means that there are stocks that are going down and there are stocks that are going up, as we saw last week in semiconductors. Just when everyone became bullish on them, they had
a lot of this was related to. I mean, they had a good rally Friday and closed.
There were a couple earnings reports that disappointed, like Intel, one of them, and also Xilinx is the other one.
Yeah.
Keep in mind that the semiconductors ETF SMH is up more than 30% year to date. So even after the pullback. So I mean, it's completely normal to see some type of consolidation, either through time or through price.
Yeah. So the semis, which I don't own, area to watch, but it's really continues to be software eating the world. And we went through Google, Apple. Let's quickly show people Momentum 50 list, a few of the names.
Oh, yeah, sure. And Facebook is also coming back, by the way. Look at that earnings gap.
Yeah, I think, $5 billion fine kind of brushed off. Stock went higher. It's hard to grasp the numbers here. So ServiceNow, Trade Desk, Elastic. So it's a lot, like we see Smartsheet, Workday.
Cybersecurity names, yes. And
the two that interest me, one that interests me was Match Group. We can see that if you're going to own consumer software, I think Match.com kind of closing in there at a weekly high. I think what's interesting about Match.com is their subscription model at Tinder and a lot of their dating apps. So it's not your typical consumer software company. Had been on my 8 to 80 list, not on my list right now, but I'm kind of thinking of bringing it back. It's not obviously an 8 to 80, but more of an 18 to 80 for people in college, right through your 80s. They have an app for everything. So I think that company remains, even though there's just a lot. This isn't a cheap company. We can see that people are willing, or the institutions are paying up for subscription business. And then back on the SL50, I think at the top of the list, we see some new names there, but Arrowhead Pharmaceutical. Well, let's see, that's pharmaceuticals have been getting kind of beat up. But yeah, that looks pretty interesting. Where's the monthly on that? Yes, and so it's biotech. Okay, don't know much about it, but on a weekly, it's a pretty nice setup. Okay.
Yeah, we have a beautiful cup and then a handle here. So if it clears with 20.
Yeah, I think this week I'm just going to wait and see how Google, Apple, Spotify Google covering software, Apple, being kind of the market outside of software, and then Spotify in the low margin side. Disney was the company that went into the weekend. It's one of my favorites. I'm long. Hasn't what a breakout on their announcement, and then closed with a movie. I just too long. The Avengers, 3 hours, but supposedly did the biggest numbers this weekend.
Yeah, they said $1.2 billion, the biggest weekend.
I think they paid $4 billion for Marvel, I don't know, 10, 15 years ago, and now just this weekend it did $1.2 billion in revenue, this movie alone. So I would say good deal, or it was back in 13, 14 that they did that deal for Marvel. So they're hitting on all cylinders, and I wouldn't be surprised to see this market take Disney just higher.
I think it's also a sign that we are in a really, really strong bull market for content. But even though there's so much new content, there is.
Well, I think Google covers user generated for video, and Netflix and Disney. Also, Disney bought back more of Hulu. But if we look at Netflix, even though after it drifted down after the Disney announcement, it's kind of gained it all back.
Yeah, my point is that there is a lot of new content, but there's not enough new quality content. Like 99% of the stuff that is produced is just unwatchable. So that's why
most of the Netflix stuff that I see is unwatchable.
That's why so many people are just willing to go and watch something like the Avengers.
But for the price, of what Netflix is, you get what you pay for. They're just banging out content. They board another $2 billion. I think that the other big story of the week is Tesla.
Oh yeah, definitely. It broke out some.
Look at that trend down
level.
Yeah.
Here, the buyers were stepping up near 250, and I saw so many people saying, "Oh, just buy every dip to 250 in Tesla." But after so many tests, it just finally broke down, and I think the next potential level is around 200. I don't own any of that stock, and I'm not sure.
Everybody who loves that company is already just massively long. So I think the danger here is you've got a lot of retail people who have just been wasting their time in this stock for 2-3 years. Their average price is probably high 2s to low 3s, and they're just not going to have the firepower. And then with the relative strength rating of 9, and the fact that I don't know, I'm really it's fascinating to watch, but I don't know what firepower is there other than the fact there's so many shorts. So the earnings disaster, the earnings story was just, I think it was a shock to not so much the shareholders, the retail shareholders, it was to Wall Street. And so a lot of the remaining Wall Street fans threw in the towel. I don't know how you value this company, but I think, relative strength of 9 in a market that's doing phenomenal. I think it's one, the Spotify and Tesla are worth watching this week to see what happens, and then obviously Google.
Yeah, absolutely. And the two good news from Tesla were that they're gonna offer an electric leaf blower, noiseless, and the other one was like Elon Musk said that all of Tesla cars will be able to self-drive next year.
Yeah, well, you can self-drive, but the government's not just going to roll over. There's only so far self-driving can go before regulations slow it down. So just pull up the markets one more time. I have a NASDAQ 100. We'll leave it there. There you go. Microsoft, Amazon. I guess if Google and Apple shit the bed, we'll revisit this next week. But I don't think there's any reason to get fancy in this tape. It's software, taking over for the semiconductors last week. So unless we see some software blow-ups, we're in a pretty good market.
Yeah, at this point, any pullback will be welcomed as a buying opportunity.
Yep. So have your list, and we'll see you next Sunday.
Yep, exactly. All right.